Kendra Bishop with the Bishop Real Estate Group, and I am here today for our monthly market update. It is February 2023, and I'm here to chat about the market. What's going on? What have we been hearing since the beginning of the year? What are we predicting for the rest of this year? What are some of the current terms that we're hearing in the marketplace, and how this may all apply to you? First and foremost, I want to remind you again that real estate is hyper-local. So what I talk about today may not even apply to you. It is really important that you reach out to the team direct if you have questions about your individual circumstance so that we can really get you armed with the correct data. Most of what you're hearing on the news, most of what you're reading on the internet is national based, it may be state based, there might even be a little bit that's Sacramento Valley, but we are so hyper local on what we are seeing in the market today that it's really, really important that you come to us and rely on us for very up-to-date market data and knowledge. With that being said, I've got a team behind me with hundreds of years of experience. I've been in this real estate market here locally for 22 years, and so we do feel poised to be able to answer questions articulately, intelligently, ethically, and doing what's best for you as our clients. With that being said, let's talk about what's happening in the market. We are for sure seeing some changes brewing in the market. Interest rates have for sure taken a beating and have had some effect on that. So let's talk about the entire market on a whole. The Sacramento Valley, January 23 compared to January 22, home sales are up 25%. That means listings. Homes on the market up 25%. Solds are down 45% year over year. Pendings are down 25% year over year. The average price per square foot is down 6%. It's running right around $309 a square foot. That's 6% from a year ago. 15% from our height, which we kind of are looking at was April, May of last year. So we have seen some price declines overall for sure. Days on market, houses are sitting on market a little bit longer. We are running about 54 days on market compared to about 25 days last year. Our sales price, our list price to sell price, meaning what our house is selling for. Last year, they were running in the market anywhere from 100 to 104%. Right now, it's sitting at about 94% for the entire market wide. Placer County is trending actually differently. And this is what we're talking about, how everything is very different from the entire Sacramento region. As an example, Placer County listings are up 50% year over year. Solds are down 42%. Pendings are down just 1.5%. So we're starting to see a little more uptick in the pending activity in Placer County. The average price per square foot is $306. It's down 7.5% year over year and about 15% from the height of April, May 22. Days on market is sitting around 60 days on market. So we are seeing Placer County trending a little differently. We have 2.9 months of inventory in Placer County, which is still really considered low inventory overall. That is still considered very much a seller's market. If I remind you, up to 3 months is a seller's market, 4 to 6 months is a neutral market, over 6 months is considered a buyer's market. When we look at the over $1 million market, it's starting to trend very differently. Solds are down 63% year over year. Pendings are down 5.5%. Inventory is up 38%. But from December to January, our inventory shot up. We had 4.8 months of inventory in December. In January, we're sitting at 8.1 months of inventory. That definitely transitioned the market. Our sales price, our list price to sell price has gone down to about 91%. So homes are selling about 9% under list price on average. So what does that mean? Part of what we are seeing in the market is a lack of inventory over the majority of the market. Buyers competing for the good inventory that comes on, the inventory that is priced right, that shows right, are still getting multiple offers. And then we have inventory that is priced incorrectly that is not getting offers, that is sitting on the market, or maybe it has a functional issue with the house, or maybe it has a style issue or it's dated. Those homes are definitely skewing the stats. Some of the terms we're hearing in the marketplace, we're hearing seller's pricing. That's a term for a home that is priced by a seller, not by market stats, not by the comps. We're hearing agent pricing. Some agents are pricing houses super low to get multiple offers in bidding wars because they're concerned that the sky is falling. We are hearing that offers are coming in what the buyer wanted to offer without any real comps or reasoning in the market or looking at any of these stats. So we are literally seeing offers on a house that are skewed from 100,000 under list price to 50,000 over list price and everything in between. There is definitely skewed offers right now in the market. We hear obviously the market is crashing, that the sky is falling, and we are not seeing that in our market today. We are not seeing that overall at all. But we are seeing homes sitting on the market longer. We are seeing multiple showings on houses and buyers not pulling the trigger quickly. We are seeing people taking their time. With that said, the rates and financing is playing a huge part in the market currently. Jumbo rates, for the first time in a really long time, are priced lower than conforming rates. Jumbo rates are over a loan of $726,200 approximately. But jumbo rates are running anywhere from 0.75 of a point to a point below traditional financing. So what does that mean? Today's rates quoted from one of our local lenders, jumbos are sitting more in the 5.6, 5.75% range, where conformings are sitting higher at 6.4 to the high 6 range. So it's definitely jumping around. Those rates are almost a point lower at the beginning of February, and we are seeing point and rate jump arounds quite frequently right now. And so locking in when rates come down is super important. We are seeing a lot of relocations from the Bay Area still happening. We are seeing a lot of cash. We are seeing a lot of creative financing with sellers being asked to buy down rates. Even there's a program with short-term buy down rates. So there are things that are happening in the market to offset really what's driving the market right now in the concern of interest rates. And while interest rates are at a historically still low to average rate, they're significantly higher than they were a year ago. January of last year is when we hit the low in rates, and they were in the 3% range. So that's the market today. I think that rates are going to be the big tune that we're hearing all year long. As rates come down, we'll see the market perk up a bit. As rates go up, we'll see it slow down. And I think we're going to see a bit of a yo-yo as the year progresses. But as always, please remember to contact us. Any questions, we are here to answer. We are intimately involved in the market. We are working through it, in it on the daily. We understand all the idiosyncrasies of the market and how to support you as we see changes continue in 2023. Signing off for now. Look forward to seeing you all very, very soon, and hope that it is an amazing 2023 for you and your families. Thank you.